Eric Muadid, Muadid.com, for the weekend of June 6th and June 7th, 2015. World market analysis. I'm recording this with about 1 hour to go before the US markets close, as you can see here. And so let's take a look at how world markets close. Pretty much most of them are closed about this time, and we can see that Asia was pretty much a mixed bag, with China being up again, Hong Kong was down, and this is how the other markets traded at the close of Friday. Take a look at Europe, and we can see on Friday pretty much down. The major markets, for example, were down about a percentage point on average, so down day. If we take a look at, let's take a look at the Americas, see what Brazil is doing, and the other markets in South America and the Americas. Canada is pretty much unchanged. Brazil is slightly down, and so on. So let's take a look at the charts here, see what we have. If we take a look at the S&P 500 with 1 hour to go, just want to show you that on the daily for the SPX, we are back testing this line here. As you can see, where the RSI is trading is exactly on the line. If it holds, which is right there, then the market should be poised to move higher. Otherwise, if we break this in the coming days or so, that's gonna usher in a big drop. Right now, in my opinion, looks like the market is holding, and so we'll assume that's how it looks until we see a break. Right now looks like support, so we'll play the support based on that daily chart. And this type of analysis can also be seen by the Canadian market daily. Simple line connecting recent lows on the TSX. As you can see, trading back to this lows line on the daily RSI and connecting previous lows. And all these lows here is exactly where it's trading. So if this can hold, that would suggest that more than likely we might get a bounce, and so we have to play this from a bounce perspective. Otherwise, obviously, if we break below that support line, then this market could be in trouble. Right now, if we take a look at the hourly charts for the TSX, we see that the hourly charts also look okay. Actually, I think they do point to a possibility of a move higher. And the reason why I say that is, number one, over the last week or so, in fact about 2 weeks, we've generally held these lows. And while these lows were being formed, in fact a slight lower low here in the price, we see that the RSI has been making an improvement on the lows, so making higher lows. And that positive divergence, in my opinion, until we see a break, suggests that more than likely the market also here looks to bounce because of that RSI support on the hourly. If the hourly is showing potential for bounce, then I assume the daily is also going to hold that line we just discussed. This can also be evidenced by the fact that the Brazilian market, which had seen a recent weekly drop, has come back to the same line of support. So we see that recently there's a drop, brought the market off the highs at about 58,000 all the way to about 53,000. But now we see that the RSI connecting recent lows did come into play, and so connecting the lows here close to that low, that line has held, suggesting that more than likely we could see a bounce. Also keep in mind that we are trading in what could be sideways action, because we have market trading between the 200-day moving average and the 50-day moving average, which is again another sign of indecision. But from my perspective, I think the daily is holding, so we have to assume that it suggests that over time, in the coming weeks or so, in the coming days, this market moves higher unless it breaks this simple line of support. Now, this is not the only market that is doing that, because we also see another market. This time we're taking a look at the FTSE, which had a down session on Friday, down 0.8%, and coming close to testing the 200-day moving average. Had a big drop this past week. Take a look at where the RSI ended for the week. connecting the lows like that, connects these lows here on the daily RSI, this low, and is exactly where it closed. So obviously if we break below that line, that's bearish. Otherwise, if the market can figure out a way of moving above and holding support, then the next swing trade should be to the upside, in my opinion. If you take a look at the FTSE weekly, we can see that for the week we had a big down drop for the week, 2.57% down. And the reason being that the RSI on the weekly moved below 50, and that is why we had a relatively big down week. Keep in mind, if the daily charts hold and the coming week we jump back above 50, expect the market to record a good swing trade to the upside as it moves back above 50. So either this could be an area of support based on the daily RSI line. We see that the French market had a big drop on Friday, and I believe what's going on is that it is coming back to test this entry here in the market. As you can see, this was the perfect entry on hindsight here. This RSI movement, this breakout, corresponds with the lows, with the entry somewhere there, and market's been trading well since then. So we can see that we can draw a line from there, which would be something like that. And I think even with that drop on Friday, the market just coming back to test this line here. If it holds, that would suggest a daily bounce is around the corner. We can see that the market has been using the same level for entry. There's an entry off the lows here. It used the same level for entry here, which is this entry around here, and recently held on the line, which is this consolidation around here. And day to day, if this holds somewhere around here, I would expect the French market to also be signaling a bounce higher on the European markets. If we take a look at the German market, just like the French market, we can see it's coming back to test the ideal entry of these lows, which happen to be right there. And so we can draw our uniformity line like that. We can see this market has used this to be a support area on the green line on multiple occasions, successfully pushing the market higher. Double bottom support here for these lows. And with Friday's drop, if this line can hold, then one can assume that the market should be okay. Otherwise, if we break that green line, then the indication is that markets could coil down. Right now, it looks like we are back to support. My thinking there is that more than likely the market should be moving higher. Take a look at the Russian market by way of the Russian ETF that trades in the US. We can see that this market's been down ever since it hit resistance. And the resistance line, as we've been discussing the last couple of weekend analysis videos, is it came back to this line of break. Now this break was instrumental in bringing the market off the highs here, and so you can draw a straight line from there. You can make something like that, and you can see we came close here, which was resistance. We dropped after that, and now over the last couple of weeks we came here, we hit that line, and we've been moving lower since those sell signal was there in the charts. Take a look at the daily, and I think the daily is showing a little bit of a potential for support. Again, coming off the lows here, you can see the market has bounced well, and in fact this in a way plays into how crude oil is trading. So with crude oil bouncing, you can see that it's come off the high of the lows there, and that movement on hindsight began here, which is this RSI move, corresponds with the lows there. Market's been trading higher since, so we can draw a line from there and see whether we can draw that correctly. Something like that. And what I see here, in my opinion, is double bottom support, suggesting that the Russian market, based on this double bottom support, more than likely looks set to also start moving higher, unless it breaks that green line by moving below it. But because we haven't seen that, we have to take what's in front of us. And right now what I see here, in my opinion, is uniform activity, suggesting that the market here, uniform activity, suggesting that the market is preparing to bounce after this drop from recent highs. So on a day-to-day basis, I would also look at that market to be ready for a bounce. In fact, I noticed the same type of analysis on the Nigerian market. If you use the NGE, the ETF that trades in the US and tracks the Nigerian market, because it trades almost similar to the Russian market in a way, because it's heavily influenced by the price of crude oil, you can see coming off the lows here, similar type analysis. So off the lows here, RSI did move above this level here. So that entry on hindsight was successful in holding the market and bring it off the lows. We can draw a line from there like that. So the market has used this once before for a nice entry, for a nice swing trade higher, as you can see. And now we've come back to test the same level. If we hold, the assumption is we go higher. Otherwise, if we break that obvious line, then maybe this suggests that we are looking to move lower. Right now, I would play this for a bounce because the market is holding exactly where it needs to hold. Let's take a look at some Asian markets. Take a look at the South Korean market, the KOSPI. We can see that as of right now, it looks like it is failing to hold above the previous breakout level of 2076. And now we have a fresh breakout level of 2127.17. So if it can move above 2127.17, that would be a fresh breakout if we can get there. Otherwise, as of right now, it is failing to hold the previous breakout level here. It seems to be under threat. But the next potential breakout, if it takes place for a bullish move, is if it can climb above this recent monthly closing high. Seems to be a problem on the RSI. If you go back to the previous RSI break line, which was this break here in 08, so that break in 08 led to this break in price and this huge drop in the price. And of course, we know that was a bear market worldwide. So this drop, since then, the market's been failing every time it moves back below that line, and I'll show that. We can see that there was a break point here, which is in 2011, which brought the market down. Market hasn't been back to those highs recorded right there, and since then you can see that every time the market tries to move, it comes into an area close to that level. It finds resistance. Even recently here, those resistance which of those highs, and now we are showing resistance. So on the monthly, it looks like it is struggling. So obviously, if it's to do well, it's gonna take a while. It needs to break out above this blue line where it's been stalling since 2011, and in fact, if you go back all the way to 2008. So seems to be a little bit of a problem there. If we take a look at the daily, like other world markets, it's showing a little bit of a healthy situation. Couple of things to observe here is, so this was the breakout on this declining price level, the entry there. Since then, the market has held above that breakout level, so which is good. So which means this breakout continues to be in play because the market has held above that breakout line. That's good. Also on the RSI, you can see that it's back to the level where it's been finding support. If it can hold, just like the other markets we've discussed in this video, if it can hold, then that means that the next swing trade is higher. Otherwise, if it breaks, then the next swing trade is definitely going to be lower. So that's the case there. And you can see this line has also held the market during recent lows. Like it held here during these short-term lows, and it also held here during these main lows. So that line has been instrumental. In fact, if you go back even to the last year, you can see these lows here correspond to the lows in that line, and also this uniform activity support corresponds to the lows here. So this could easily be support territory because the market is trading back to where it's been finding support. If we take a look at the Chinese market, you can see that after this huge 7% one-day drop somewhere, so there was a 7% drop here one day, but since then the market has recovered and is now close to recording new highs. At some point it's going to pull back. I guess we'll have to wait for the charts to tell us, but as far as I'm concerned, and I've been saying this for a long time, as long as the RSI is trading above 69.1, as long as this is the case and RSI is trading above 69.1, this is going to be a tough market to kill. So ever since it moved above 69.1 sometime in August 2014 last year, market's been on a tear. And until it moves back below 69.1, I would expect it to continue doing well. Take a look at the monthly. That was the weekly. Take a look at the monthly. Monthly continues to hold above 69.1, and that just suggests that this is a strong market. It's not yet time to look for short opportunities. In fact, you should be looking for buying opportunities as best as you can. Otherwise, you might miss a similar move here, where the market held above 69.1 from the level here of about 1500 all the way to 6000. So I'm not saying it has to go any further, but I'm saying as long as this is the case, with the RSI holding above 69.1, it's a scary market to try and short. If we take a look at the Japanese market, we can see that it continues to hold above the recent breakout level, so above this weekly closing high. It has held above that now for 3 weeks, so that breakout continues to be acting well. We also see that the RSI on the weekly is doing okay, trading above 69.10. And just like the Chinese market, if we take a look at the monthly for Japan, we can also see that its monthly RSI is very strong and continues to hold above 69.1. So that's a strong market also. And check this out. Ever since it jumped above 69.1, price there was during this breakout at about, let's call it 1500. This breakout there, RSI has held above 69.1 for a nice run. And just as you can see here, it's only after it moved below 69.1 here, the movement below 69.1 during this phase is what brought it slightly down. And also you can see that nice movement in price during this phase. So the RSI kept above 69.1 here, which was this price movement from about 1200 all the way to the highs of about, let's call it 1500 or so, or 1600. So as long as the market is holding above 69.1, you just gotta be aware it can continue slowly grinding to the upside. If we take a look at the Australian market, huge drop on Thursday, but it was unchanged on Friday, so we still continue trading on this level here on the RSI. And even though we broke below the 200-day moving average, which is scary, the last time we tried to move above a major moving average was here at the 50-day moving average and failed. Now it's back below the 200-day moving average. I believe that's putting a lot of fear in traders. But let's look at this from a perfect entry level. Perfect entry level was here during these lows, and since these lows, market went on to record new highs. We can see that that movement began with the RSI moving above this line here. So that entry here in the RSI on hindsight began the nice move, and all the market is doing is coming back to test that line. Just like the other markets worldwide, if this holds, then that's bullish. Otherwise, if this green line is broken, then we expect a continued move to the downside. Since it closed around that line, my assumption is that it is back to the line to test it, and until it breaks, more than likely we are looking at a market that could find support and move higher. Weekend analysis for the weekend of June 6th and June 7th, 2015. Let's take a look at how the Nifty closed on Friday. It was down slightly, down 0.2%. Let's see how the charts did end at the conclusion of that week. And what I have in front of you is the Nifty weekly, and we have a developing story here. If we don't hold the support levels going back to 2009 on the weekly, so if this does not hold, let me just draw it like that. If this does not hold, and actually let me do this again because I think this is 2011. Let's go back a little bit further. There we go. So going back to the lows of 08, connect the lows through 2011 like that, and you can see that we've been talking about this lows line being support or break, and it's a very clearly defined line on the weekly chart. If this does not hold, one can expect that the market is going into a new phase, which is going to be a bearish phase. So this is definitely a must hold. Otherwise, if it continues breaking, the indication here is that this market is due for a plunge. So we need to watch that for support or for failure, which might signal a big down drop. Also, we can see that there's a line connecting recent MACD lows like that, and this line connects the MACD lows in late 2011, early 2012, connecting to the lows of late 2013, and we can see here we are showing signs of a breach of that line. The more we break that line, and especially if we move below zero on the MACD, that's going to indicate that there's more selling to come. Otherwise, for this market to repair the weekly chart, it needs to hold above those two lines. Number one, the weekly MACD, the MACD needs to stay above zero for support, and also we see that the blue line, which is the RSI lows line on the weekly, needs to hold with a bounce. So it needs to bounce on that line and move higher for it to start repairing itself. Otherwise, a break of those two lines here, and also the MACD support line here, and more so if the MACD on the weekly moves below zero, that's going to indicate and usher in a down period in the market. So it's support or break right now as far as the Nifty is concerned. If we take a look at the daily chart, we can see that the problem here is that as long as the MACD on the daily is holding below zero, and as long as it is showing resistance and failure to move above zero, that's a problem for the market. So on the daily, for this market to repair itself and move higher, it needs to coil the MACDs up above the zero line. Otherwise, the more it stays below zero, the more we're going to see lower prices. Also, we can see that there's an argument that can be made that potentially somewhere around here the market could stabilize, and I'll show you why. Because if you take a look at this entry in price, and this was going back to 2013, about August, September. So this entry here was very successful in moving the market higher, as you can see, and we haven't been back to those levels. So we can see that the entry was during this RSI breakout somewhere there, which corresponds with this price entry. So we can draw a line from there, which should tell us when this market has been coming back to life after pullbacks. And so that's the line there. You can see this held with uniform activity, double bottom, which gave us the lows there. We touched that line for short-term lows, uniform activity below the line, back above it for this entry, and again uniform activity and back above it for these short-term lows. And right now we are back to this level here. If we can hold, one can expect the market to bounce based on support on this line. Again, in conclusion, the key for the Nifty is the RSI support line on the weekly chart going back to 08. If that holds, that's good. If it breaks, then this market is due for a plunge. Also on the MACDs, this needs to hold. Otherwise, if it breaks, and also more importantly, if it moves below zero, that's going to be a problem. So if you're bullish, you'd like to see support on the line there on the RSI. You'd like the market to hold and refuse to go below zero, and for the MACD to start pointing higher, which would be a bullish sign. For now, we ended the week exactly at a make or break point for the Nifty. Eric Muathe with Muathe.com. Good luck. Enjoy your weekend. Peace and blessings. Boom, boom, bam, bam, boom, boom, boom.